Afternoon, everybody. Uneducated Economist here. Let me get the dice up there. Thought I'd give you guys a quick lumber update. I had quite a few people contact me saying, "Holy moly, did you look at the lumber futures contract? They're under 450 per thousand. What's going on?" And I have to say, well, wait a minute, back up just a little bit here. What you're looking at is because a lot of people use like CNBC and just kind of go to if you go to CNBC, go to commodities, go to agriculture, and then look at lumber, it'll have the lumber futures price right there. But a lot of times, what will end up happening is that they will switch what contract they're looking at. So right now, the July contract is still open, doesn't close for another week. It closes on the 15th, or at least that's, when they're supposed to close. And a lot of times what will end up happening is that the next month will turn into like the current spot month for looking at futures, but it's not really what is like the current sale price. The current sale price is something known as cash or print. And that's not necessarily something that CNBC is going to quote. You can find, I think, a fairly close, accurate number to this at bar charts. I think bar charts has a link that you can follow to get closer to the cash price. And now the cash price is also fairly relative to what mill, what species, what grade. There's a lot of different numbers that are coming across when it comes to lumber, in which that you could go to the lumber mill and then purchase, but it's not necessarily the same reflection of the futures price that we're looking at. So just to make it clear, the futures price is Standard & Better green Doug fir from the Pacific Northwest going to a central hub in Chicago. Now that's what the futures price is, or the futures contract is, right? But all the mills and all the sales and everything that they're doing with all the different distributors and distribution networks that they have established isn't necessarily exactly reflective of that particular number. Now, it is fairly close, and it is a decent number to follow as far as the direction that lumber is moving. And it is a very good indicator of what's going on, especially in the new construction. And this is really where lumber, I believe, is screaming loud right now. If you look at the cash price and the futures price, and you look at what's going on with just the overall feelings of the home builders within the market, the builder sentiment, it is not looking good for new construction. That's it, right? And now when we think about what it is that's going to bring new inventory to the housing market, it's going to come from building. That's where it's going to come from. The idea that there's going to be this overwhelming supply coming from foreclosures, overwhelming supply coming from, I don't know, economic downturn of some sort is not going to play out in the fashion that a lot of people were thinking was going to happen, like it did back in the great financial crisis. It's not the same game anymore. And now following lumber is going to be a great indicator of what's going to be happening within the building industry. See, if you see lumber all of a sudden start to take off, you're going to know that building is happening, that there's new construction taking place. But the longer that there is a time gap of production, then you are going to find the pressure is going to build. At some point, that will churn, and you're going to start seeing prices move up. Now, if you go in research, which is very difficult to find this information, the mills are in curtailment. Mills are shutting down. They are pulling inventory like crazy. They cannot produce at 450 per thousand and expect to be in a profiting manner, right? This isn't going to work for them. So they start curtailing development. They start pulling back. Now, I am witnessing this personally from the lumberyard, from my firsthand experience working retail sales at a lumberyard. Things are getting very difficult within the lumber industry as far as the distribution goes. Certain items like premium grade studs are getting harder to find. Wider lengths, 2x10s, 2x12s, longer lengths. These things are coming up in shorter supply because they're not in highest demand. And if you are a lumber mill trying to produce something that is going to sell and sell quickly, you're only going to produce that which is selling. The 2x4, the 2x6, the studs, the plate stock. This is leaving the rest of the inventory going into depletion. And it's only a matter of time. We're going to see it, right? So long as the builders are holding back, as long as the demand is low, the mills are going to continue to pull back on their inventory. And eventually, at some point, this will reverse. Now, what that would look like, how long into the future, what is it that's going to trigger it? That's anybody's guess. Could it be the lowering of interest rates? Could it be the threatening of lowering of interest rates? Is for some reason there's a 40-year loan that just starts running rampant through the economy and all of a sudden everybody's into buying houses again? Is there something of some unforeseen that's going to come out there? Or is it just going to be a simple reversal in the economic behavior and take even more time for there to build up momentum, to get into the building, to get into the idea of being able to profit at this level on a house and not be worried about going into the future with it and having to sell it for a lower price? See, this is where the builders are holding back. See, they don't want to build right now because if you build a house right now, who knows if you're going to be able to sell it when you're done? Everybody's saying, oh man, look at the housing market's on its last leg. It's about ready to crash. Well, if people feel that, then why would you want to build? Why would you want to build into that? And then at the same time, people say there's a housing shortage. Well, which one is it? Is it going to crash or is there a housing shortage? Because it's one of the two. The inevitable outcome is going to be one of the two, right? I mean, that's it. It's either going to crash or it's going to keep going higher. So which one is it? And so I look out there and I think about this and how it's gone into this realm of separation between the rich and the poor. It takes ever increasing amounts of down payment, not because it's requested by the bank, because that's what you need to do in order to lower the principal enough to achieve the interest payments and principal payments on loans nowadays. See, like before, it was like a 20% loan just to convince the bank, right? Banks came up with ideas that they could get you into a house with lesser down payment, even no down payment. House prices went through the roof, and pretty soon the capabilities of the individual is no longer capable with their normal hourly wage to make those payments, even with the 0% down. Hell no, right? 10% down, maybe 20, good, well, getting closer. 38, yeah, now we're talking. You put 38% down, and now this average job can start making these payments on these homes. Who can possibly come up with 38% down? It's like, that's not even like, now be a home builder saying, yeah, okay, I'm going to build homes into the future, and this is like what they're going to have to do in order to achieve the payment. Yeah, no, I don't think so. Yeah. This is what I find kind of humorous about this is that there's when this does reverse, right? And I'm saying it now because I want everybody who's actually following this to hear it. When this does reverse and you see those prices move up, it's going to be because there's shortages within the market right now, right? This is being created right now, right? I mean, those of us who follow the bullwhip effect can see it plainly. It's just like it's obvious right now. But at some point, these prices are going to move back up, and now I couldn't tell you how high they're going to go to or how far out into the future that's going to be. But what it does, I guarantee you are going to be hearing greed. They're going to say, and I'm going to tell you now, that's not happen is that there's probably going to be some sort of interest rate cuts going into the future. That's this year, next year, or some point later on, which is really going to start sparking some market. All right, are we back? Anyway, that will bring the capability back to the homeowner, which would then give the home builder the idea that yes, this is the time to build. When they move, there won't be enough inventory, and people are going to be like, okay, so now there's not enough inventory up there or out there. Prices move up, and then everybody's going to be screaming greed and manipulation. But it's not, right? It's the bullwhip effect. We can see it now. See, this is why I get these warnings right now, is because if you've got a project coming into the future, you might want to secure your lumber now as it's getting cheap. This July contract is going to leave a lot of cheap lumber in the system for the summer. Right? And if those lumber prices start to move up because projects start to take off for whatever reason, right, then you are going to find that there is going to be a big jump in the prices for the next few contracts going out there into the future. It's just a matter of time. All right, this is Wild. Good evening. Hey, yeah, bud. What's up, fam? Slam the like button. Yes, please do go slam that like button. We got 254 people. The like button spinning back fist. How much farther did you think it'll drop? Can't come up until interest rates drop. So, I mean, how much longer? To be honest, like think about it from this point of view. At 450 per thousand or 400 per thousand, okay, so even if it was to drop another 10% here and go to, like, say even went all the way down to 400 per thousand, think about it from this way. A 2x4, right, has about a little over 5 board feet of lumber in it. It has 5.33, a 2x4, 8 foot long, right? It has 5.33 board feet of lumber. Let's just say it has 5, right? So when you're talking 450 per thousand as opposed to 400 per thousand, right? 450 per thousand is going to be somewhere around $2.50, $3, right? So let's see, if it was Ford, yeah, it would be like $3, right? So you drop it down to 400 per thousand, and it's going to be like $2. It'll be actually 250, and it would be $2, right? So the difference of a 50-cent stud on a 2x4 in the overall grand scheme of things when it comes to building a house is not really going to be that much. Now, it is a lot. It's 10%, and is the 10% portion of the lumber package of a house, which can at times be quite expensive, especially when the lumber prices ran up to 1,700 per thousand. But that doesn't mean like you're going to save like an insane amount. Like when you have the difference of like 400 per thousand and say like 650 per thousand, now you got a significant difference, right? Especially 800 per thousand, you're almost double the price of it. So going into the future, you're probably not going to see a whole lot of price adjustments that are going to be quite significant to the downside, even unless you go down and, like, say you go down to 350 or 325, then you would see some pretty significant price cuts. But even at that point, nobody's buying, and that's the reason why they're down that far. So consider that nobody's buying right now. It's unloved, unappreciated, vital commodity. Nobody's taking advantage of it. Nobody's really building, not in a grand fashion, not taking advantage of the high housing prices. Everybody's concerned about the buyer, the interest rates being elevated. I mean, when there's, what is this? You do it when people are fearful, right? You be greedy when people are fearful, and fearful when people are greedy. And that's really what I think is going to be taking place here, especially when it comes to the lumber industry. And if you just look at the lumber industry as part of the housing market, or at least the main component of what's driving the housing market, then you can really see that the things that start to happen in lumber are going to start really reflecting throughout the rest of the industry. Right? Now, when I talk about like prices coming down, it doesn't necessarily mean that the home prices are going to come down. But you can see the economic activity that has taken place both within lumber and within homes is essentially the same thing. Nobody's buying, right? Less home purchases, less home sales are taking place, less mortgages are being issued, less people are buying lumber. Those two things are quite correlated, you know? All right, I got a $5 super chat. Let's go check it out. Grand Roofing, thank you so much for the $5. How is the price of OSB affected? Or, yeah. And what's your thoughts for it in the coming months? Thanks. Yeah, that's pretty interesting. Thanks for the question. OSB stands for oriented strand board. It's a type of sheathing out there. Generally, it's the cheaper version of, like, say, CDX, which is a plywood. So you got laminated veneers that are, glued together to make the sheathing, which is the skin of a building. So if you got like the 2x4s, 2x6s, that's the skeleton, the sheathing, the skin that goes on the outside. And CDX or OSB are two typical forms of sheathing. Now, OSB is generally the cheaper one, and is used more often in new construction, especially in high production areas where there's, building tract homes or, situations like that. It's generally conditions. Now, OSB is by far the cheaper product, but it's gone up in price, and there's a limitation on how much is out there. Now, what I found very interesting is that the manufacturing of OSB was cut prior to the pandemic. I got a great video on it talking about pulling hundreds of billions of square feet of OSB off the market. Now, I mean, it was like amazing to think about back then, considering how much OSB was out there in the market, how much people would use it, and they're going to pull a huge amount of it off, like permanently shut down production of this. Well, pandemic kicks in, COVID kicks in, all the other stuff, shutdowns, all that other. Takes a sheet of CDX and OSB, doesn't matter, either one, they're both sheathings, right? So huge demand for them. Both of them are now one of them was already in depletion of production. I mean, like permanent depletion. The other one, CDX, is now in high demand because the other one's now not in production. So the CDX goes up in higher demand. That gets pulled off the market quicker. Pandemic is kicking in. Now there's even more shortages of this stuff. This is what ends up happening. It takes a sheet of OSB, which a typical sheet of OSB prior to the pandemic, it did vary quite a bit. But let's say, anywhere from $10 to $15, I think would be a reasonable price for a sheet of OSB. CDX would be somewhere around $18 to $22 a sheet. During the pandemic, $80 a sheet. 80, right? It went off the charts. And now you think about it, you cannot complete this house unless you have sheathing, right? The lumber, right? It was in short supply. They were finding it. They pieced it together. You could take longer lumber. You cut it up into smaller lumber to make the studs. It's out there. You get the supply, but the sheathing was in short supply and nowhere to be found. Gone. Right? This is how dramatic it got, right? So I sell there's a million different types of plywood out there, right? You got like sheathing plywoods like the CDX and ACX, which has a nicer face to it. You have flooring, like tongue and glue flooring type, plywoods. You got finished plywoods like oak. You got marine grade plywoods. You've got, MDF and shelving and melamine, and there's just all kinds of different types of sheet goods that are out there. What I thought was really funny is that you took the most expensive type of plywood out there, which would generally be like your finished oak plywood or birch plywood, which would sell for around $80 to $100 a sheet. And then you go down and you go and get our 1/2-inch CDX, which is typically like the utility, sheet of plywood, and it's selling for around $80 a sheet, $80 to, $85 a sheet or whatever it got up to. And so what I thought was really crazy is at one point, as all this sheathing disappeared from the market and the demand from building had shot up and the availability of this stuff was essentially gone, right? All the plywoods, people were sheathing their house because they couldn't find 1/2-inch. They would move it up to 5/8, couldn't find 5/8. They were doing it in 3/4 CDX. And I'm thinking, holy crap, you're sheathing in 3/4-inch CDX? Yeah, because it was the same price and it was the only thing that they could find. And I thought, holy moly, talk about a sturdy house, right? I mean, a 1/2-inch is totally sufficient, but they're going to go over with 3/4 because that was the only thing that they could locate at the time. All the plywood became the same price, didn't matter. It was all the same price. It was all $80 to $100 a sheet. It didn't matter what it was you were looking at. And I thought, man, that is crazy to think that you had plywood at one time as cheap as $10 to $15, all the way up to $100. All of a sudden, everything became the same price. And it was like that for a month or a little over a month. Eventually, supply started to come back. But it never came back in the fashion on CDX like it once had. CDX never really did come back down to the pre-pandemic pricing like 2x4s did. See, 2x4 8 standard and better was, I was selling, I could go and pull receipts from 2018. I was selling them for $4.75 a stick. Right now I have them, less than that. They're like a 3.5 or something. I can't remember what I'm selling a 2x4 out right now, but they're not very much money. Now, comparatively to the $13.50 I was selling them at back in the, at their height. So lumber came back down to its normal price. Like it came back down to what everybody would consider a fairly normal price. Is it elevated? Yeah, maybe a little bit elevated, but considering everything that's going on, it's back to pre-pandemic pricing on a 2x4 standard and better. That ain't that big of a deal, right? It's back there to the normal. Plywood did not come back down to normal, right? It came back down to just above it. It landed at like, $28, $27 a sheet. For a 5-ply CDX, I can get 4-ply down at 22, 23, but not like what we had prior to the pandemic. It's still slightly elevated. Well, it makes a lot of sense. If you pull 100 billion or hundreds of billions of square feet of OSB off the market, you're probably going to have a little bit higher demand for CDX than you did prior to the pandemic going in. Well, if we were still producing all that OSB, all that plywood would be crashing right now. Those mills would be going out of business. So all I'm saying is just like maybe somebody had some foresight. Like I've been trying to anyway, no, I'm not going to go into the conspiracy theories of it. Anyway, so they had shut down all the OSB prior to the pandemic, leaving the elevated prices within CDX today. That's why they didn't quite come back down to the normal pricing like lumber did and like how a lot of people would have expected it to. Anyway. Next question. Moving on. All right. Do you have any guesstimates on what direction future copper prices are going? No. And the reason is because I don't know anything about the production of copper, right? I know a lot about the production of lumber. I mean, I live in the Pacific Northwest. I know loggers. I know truck drivers. I know mill operators. I know other distributors, retailers, wholesalers. There's no part of this lumber business that I don't know or have some sort of access to for my entire life, right? Copper, I don't know anything about copper other than what I can read on the news and like everybody else. I know that it's harder to get, it's a vital commodity, it's going to be used much in the future for EV and all the other solar, panels and everything else. I mean, it's just like I understand that copper is like probably going to be as vital to a commodity to the human existence as much as silver is. But as far as like what's going to happen with recycling of copper, like how much copper can start coming out of the woodwork that people have saved, how much is in the, like out there to be recycled and what can be done with that, I don't know. Like, I mean, it's a huge game out there that is like takes an incredible amount of like research or inside knowledge into knowing in order to have any kind of real prediction on what it's going to do. Now, with that being said, right here, let me show you. This right here is a copper penny. Right? It's, I don't know what, I don't have my glasses in here, do I? It's like, what year is this thing? I don't even know if I can see this. It's like 1974 or something like that. 1964. All right. So it's a 1964 penny. And all pennies of the United States prior to 1981, some of them through 1982. So some of them in 1982 are copper, but all of them from 1981 and earlier are all copper, right? They're 95%. Now, if you go to a really cool website called Coinflation or Co-inflation, like Coinflation, they will give you the real-time weight value of a copper penny, right? And you're going to find that these things are far beyond their face value. They're like 2.5, 3 times their face value at times. Right? So you think about it, you get a roll of copper pennies, right? You fill it up, you got 50 cents. But honestly, right, what you really have is $1.50 in metal. Right? So I think of Gresham's law, and I understand it, and I pull all copper pennies, all of them, every one of them I see. Right? I pull them out of circulation, and I happen to work retail, so that makes it really easy for me because we're constantly cracking open pennies. So I leave the zincs behind and I pull all the coppers. But even the zincs are getting fairly close to their face value. If you really want to talk about honest money and people talk about a dollar holding value and all that other stuff, they do hold value. Put it in this. Put it in copper pennies. Put every single dime you have, convert it into pennies, and have every penny in copper pennies. And not only will you triple your money instantaneously from the value of the money that you do hold, but you can't destroy it, which means that it's still a face value of $1 for every 100 of them that you have. So when people say, oh man, the dollar's lost value, it don't have any value anymore. I mean, it's just like, look at it losing. No, you just have it in the wrong currency. See, you put it in these pennies, you put 100 pennies together, and now you have 1.5 times your face value. You can't possibly be under. You are now ahead, right? So people are like, yeah, dollar's worthless. No, they're not. They're not worthless, right? You just have to have it in the right form. Nickels too, right? Nickels are really close. All right, thank you so much, Space Cowboy, for joining the membership. I will figure out something to do for a membership video. We'll try and get one of those knocked out this weekend. I will definitely give you guys a heads up to give you plenty of time to prepare for it. Only watch on YouTube how copper is refined, how much effort is put in there. Yeah, I look at silver. Like I look at the efforts that goes into trying to get silver, and it's unreal, right? And then to think about it is that most of it's a byproduct of other mining anyway. Right? It's not even like people don't even really go for silver. I mean, they do, but not really. It's like most of it is like, from mining other metals. Don't hold debt, hold metal. Yeah. From fiat currency to actual commodity. Yeah. 300 likes or bust. Alrighty, guys, we're getting up onto that half an hour mark. I'm hearing there are still certain home material shortages. No, I don't know. Like, I haven't found anything that's coming up in short supply on just about anything that I've ordered, except for some lumber material. And quite interesting enough, the vinyl windows, which had like shortened up quite a bit on, like, there was a time prior to the pandemic, I could get a vinyl window in 10 days. Right? I order a window 10 days later, it was there. It was so awesome. But as time went on and the pandemic kicked in, it turned into like, 60 days or even more. Well, then that timeline really starting to shorten up, especially now with the building, not being as prevalent as it once was. Then I figured that production would have caught up and that we would start seeing those $10, 10-day lead times again. But it really didn't happen. It got up to about 2 weeks, 2 to 3 weeks, and I was just like, okay, here we are, we're getting closer. But now I noticed that it's moving back out to 30 days. So whether a slowdown in production, labor shortage, whatever, cutting back on costs, or maybe production lines, I don't know about any of that stuff. But it seems that the data on Windows has moved back out a little bit, which to me is like either a sign of demand ramping up or their production line slowing down. So I mean, it's to me, it must be the production line slowing down because I can't see. But considering it is summertime, I think lead times are the new model for the companies to keep prices up. Yeah, I don't know. No, I mean, see, the thing is that it always comes down to competition, right? So I mean, even if there is a lead time, right? If I tell somebody it's just like, hey, it's going to take, you know, it's going to take 2 weeks. It's going to take 2 weeks to get. And it's just, that's the way it is. And you go to everybody around who is supplying stuff and they all tell you, hey man, it's going to be 2 weeks, right? And you get a quote from everybody and it's all $100, right? Yeah, $100, 2 weeks, guaranteed every time. But then somebody comes up to you and says, yeah, or you found somebody who can get it to you in a week and it's going to be $200. Right? Now, what's the difference in here, right? You could say the lead time, right, as out here is creating a competitive situation because this is how we all get it at the same time. And in order to be competitive, we all have to charge a reasonable amount. But now this guy can get it faster. So he doesn't have to be competitive. He can have his price elevated because he can have it today as opposed to tomorrow. Now, if he didn't have any other choice, then he would be back down there at $100 just like everybody else. But we can get that lead time to move up. See, now you can increase prices this way, right? Because you're actually moving away from competition, going and picking up that item and presenting it here faster than anybody else can, then you get to charge a premium for that. That's the way it really works. Now, if I tell you I can't get it for 2 weeks, right? And I'm going to charge $100 for it. And somebody else goes over there and says, hey, I can't get it for 2 weeks and he's going to charge you $100. Well, I'll charge you 98, right? He would honestly like to charge you 102, but he wants to get the sale, right? So he's going to charge 98. Now we're all in competition that way. That's the way it is. When I find out that they're doing $98 across the board, I'm going to go down to 96. It's just the way I want to get the sale. I'm going to have to do it. And then those guys are going to go down to 94, and then I'm going to go down to 91, and then I'm going to say, that's it. I am not going any further than that. And if you go any below that, you're losing out, and you can go ahead and run and make hard work for yourself that doesn't have any kind of profit to it, because I'm not going any farther than that. That's how it works. Yeah. Now, you can push out the lead time and say, hey, it costs that much money. And it was just like, that's how much it costs because that's how long it takes to get, right? And it's short supply. There's not a lot of it. If there was a lot of it, it would be here tomorrow. But there's not. That's why it takes 2 months. And because it takes 2 months and this guy needs it today, he will pay any price for it. Especially if you're a builder, that's inelastic demand. You've signed a contract. You need to keep going on this project. You will pay any price for the material to continue on this project because you're under contract. That's inelastic demand. Elastic demand is the chicken coop in the back or the remodeling of the house, right? Both of those things can be like, I don't know, maybe we'll wait till next year. Don't know if, but that's when you have inelastic demand coming from the builders and there's no supply, prices will skyrocket, right? Because they will pay any price. That's all there is to it. I think lead times. Oh, we already read that one. Okay. Smash the like. Yeah, please do. We're at 32 minutes into this. We got 300 people watching with 137 likes. If you want to continue it on for, let's say, until the 45-minute mark, go hit the like button. Let's get it up to 150 likes in the next few minutes here, and we'll continue on for a while. And it's the cost. Do you guys have any more questions about it? Like, what other questions do you have about the industry? About the lumber industry? Let's knock that one out. Let's kind of break down all the myths, all the ideas out there, like anything that anybody's ever heard. Remember all the mills, all the lumber shortages were because all the mills burned down. So I guess they rebuilt those mills, right? I mean, that's no longer a problem anymore. I mean, where are all the conspiracy theories out there about why lumber shortages are taking place? And I want to I want to debunk all those things. But nobody knows. Like, everybody's taken by surprise by it. They didn't know that it was going to go back down to a normal price. Everybody thought that inflation was going to run rampant and going to kill it and destroy everybody. And I was the one person out there who was like, no, man, this is supply-demand imbalances. Just give it some time, and you're going to watch these prices go back down to normal. Well, here we are. Like, nobody can explain this. Nobody, I asked 1 million people, can you please explain to me why it is that lumber went from its all-time high of $1,700 per thousand and was like the evidence of money printer and inflation, and now here it is at the same price that it was back in 2017, 18, prior to the shifting of the way that they even hold these contracts or do these contracts, because now it has an added rail cost going to Chicago, which incorporates even more cost into that price. So really, if you compared it to what it was prior to the pandemic, when they were considering the contracts differently, that price would be a lot lower than it is today. So again, it's just like what it is that the mills are doing right now for production is so it is not like the most profitable position that they could possibly be in. And that would put them in a position in which that they would go into curtailment, right? If they could be in a position in which that inventory would, or like demand was ramping up, right? Then that would get them excited about production, right? Like even the idea of moving up in futures price would then have them running more lines, right? But the moment that they feel like, oh crap, it's going to go down, there's going to be less demand, there's going to be, an overabundance of inventory in the system, or that we wouldn't be able to move the inventory that we have, they're shut down. That's all there is to it. What do we got here? Grand Roofing. Thank you so much for the $20 and hit me up with these super chats, man. I really appreciate you. About the pennies and Gresham's Law, check this out when you get a chance. Can't link it here, so when you get a chance, search Grand Roofing Gresham's Law. It's a machine with an Arduino I built in to sort copper pennies. Hey, that's awesome, man. I've seen some of those machines before where you can drop them in and it'll spit zinc one way or the other. And that's really cool, man. I mean, I love to see it. And I think everybody should go check that out here when the stream is over. You know, one of the things else that I found interesting about copper pennies, not the wheat pennies, not the wheat back pennies, but just the regular Lincoln Memorial pennies, is that they weigh 3.11 grams. Think about that. 10 pennies is exactly a troy ounce. Now, it's not a troy ounce worth of copper because, you know, they're 95% copper, but I thought that was a very interesting thing to weigh them out as. So like 10 of these weighs exactly 1 troy ounce. I thought that was pretty funny. All right. Yeah, we'll definitely have to check out the video, everybody. I mean, let's go hit them up, give them some likes, give them some thumbs up, and show how much we appreciate them putting the video together. Do you think the cost of building a home will go down to 2010 levels, or has inflation already made its mark? Here's the thing. I don't think you're slow down. All right. I think your chances of being able to build a cheap home are a very short window of opportunity, right? That's right now. Because you think about it, anytime you have a gap in production, you are going to have a situation in which that prices are going to move up, right? A gap in production is going to limit the inventory. It's going to take inventory down and it's going to increase demand. Anytime you have this, right? And so what I think about is the gap not only in lumber, but then I think about the gap in production that has taken place in the homes, like actual housing. Those two things together, and they're very well correlated when you look at it. Like, if you're not building houses, then you don't need to be putting lumber together, or you don't need to be milling out lumber. It's just like these two go hand in hand, right? So the moment that you see that lumber is starting to move up in demand because of the home building that has taken place, then you're going to see those lumber prices skyrocket. There's not enough inventory out there. And now, I shouldn't say they're going to skyrocket. What I should say is that there is a lot of pent-up demand for building right now, new construction. There's a lot of pent-up demand for that. And if the market gets excited in a fashion of which that they truly do reasonably believe that there is going to be an actual interest rate cut and not some dot plot propaganda easing of financial conditions, but an actual real monetary position of lowering interest rates, then I believe that would actually excite the home builders, excite the buyers, excite the people out there to go out there and start participating within the home purchasing, right? Because they all want to, but they're all nervous about doing it, right? That nobody wants to jump right now. And anytime a price comes up, comes down into a reasonable fashion, it gets nabbed up right away. So there's a lot of pent up demand for homes that people are just sitting by, just waiting to do, right? So once ramping up and people are actually encouraged about buying homes, thinking that they may be able to refinance them into the future or something of that nature that gives them this belief, then the home builders are going to be like, yeah, here's our moment, let's go. And they are pent up as well, because considering that they haven't been producing as much over the last few years. I mean, they were on a steady increasing supply all the way up until 2019. Then it shot way up during COVID, but then it's back, right? So now here we are, basically at the same level as we were prior to COVID, and we're actually diminishing on the amount of permanent and home starts. So again, this is the pent-up demand. Home builders, they don't want to sit around not building. They want to build. They want to build as much. You can tell that they're not doing it by the lumber demand, right? So the lumber demand's down. Home building is not being very active at the moment. So home prices are doing what? They're going up. Why? Because there's not any new homes being built, right? So it's not the interest rates. The interest rates are supposed to destroy the housing market. It didn't do it, right? All the stuff was supposed to destroy the housing market, all the things. Right? COVID was going to destroy it. The moratoriums were going to destroy it. Interest rates elevation was going to destroy it. Everything was going to destroy it. It hasn't happened yet. And now the longer we wait for it to get destroyed, the fewer and fewer and fewer of homes that are getting built to meet the demand. So the demand doesn't go away. Just because somebody doesn't have the ability to buy a home doesn't mean they don't want it. They still want the home. They're just not in a position in which they can do it. bring the capabilities for them to do it, and they'll be there. All of a sudden, the demand is going to swell when the capabilities become available to them, right? So people are like, there's no demand for homes. It's not. Like, the demand is overwhelming. It's the capabilities that isn't there. Yeah, huge difference. Once the capabilities are there, the demand is going to be off the charts. And so what's going to end up happening to lumber prices, and what happens to the new build? Well, if all of a sudden the home builders get real excited about this, they're like, man, okay, lower interest rates coming into the future, house prices are elevated, people are getting active inside of it, I'm in, right? Boom. So they start building homes. Well, all of a sudden, you have a shortage of lumber out there. Lumber prices start to go up. How much does it cost to build a home? We don't know. Lumber prices keep going up. So now we have to add ever increasing amounts of cost into the price of building this home because we don't know how far up these lumber prices are going to go. And considering people have been scared all the way up to $1,700 per thousand, who knows how much those builders are going to charge? They're going to charge as much as they can, which is going to be an elevated amount considering how high home prices are today. Like, to me, this is get your lumber while it's cheap. If you can build a home now, build a home. Right? Build a home. What do you have to lose? They're hard to get and they're expensive. What do you have to lose? Like, go build a home. And especially if it's for yourself and you plan on living it, definitely go build a home. Right? Especially if you can do that. Nobody's doing it. And the cost of doing it is too much. It's too expensive. And it's going to keep those prices elevated going into the future, and it's going to leave the poor behind. The inequality is going to grow. It's going to become a renter nation, right, of property owners and renters, and the property owners will be the ones who are separating themselves from everybody. I mean, I don't mean to sound arrogant or like even mean about that. It's not me saying that. It's this dude. This dude says it hundreds of years ago, right? And like, I mean, we can choose not to believe it, or we can say, damn, man, that guy had some pretty good insight into what the economic forces do to the economy out there. And if you don't follow along, you're going to get left behind, right? And that's where it's so important to start following people who are actually in the game, who know how to do this. That's why I tell people, it's just like, if once you understand monetary policy, that's the point of my channel, right? Is to understand monetary policy and how these economic forces are taking place. Like, I'm not the smartest dude in the world, but I have broken down a lot of this stuff. But when it comes to buying houses and renting them out and fixing them up and doing all, maybe fixing them up, I could do that part. But, you know, fixing them out to rent or something of that nature, I've never done that, right? Lumberjack Landlord, Dion, right? Zuber. These guys are the ones that know how to do this stuff, right? Jason Hartman, Ken McElroy. These guys, I mean, they are in the game and know it well, right? Now, I can honestly go to debate with them when it comes to monetary policy, but I certainly couldn't go to debate them against real estate investments. I mean, they know that game so well, right? And now when I go and hang out with guys like at the Rebel Capitalist or, you know, whoever, all the people who I find are, in my opinion, pretty damn successful, the things that I would like to achieve at some point in my life, I look at every single one of these guys, and every single one of them did it in real estate, right? So why am I going to try and reinvent the wheel? That's the way it needs to be done. And now when I talk to people who said that they were buying houses, fixing them up, renting them out, and sleeping in their car, right, so that they could rent out a house to try and get that property, and that's how they were able to, you know, try and acquire some pieces of property. And I think, damn, man, there's some dedicated people out there to becoming property owners. Some damn dedicated people out there. While everybody else is bitching that they don't have their opportunity, there's some people out there who aren't waiting. Right? They ain't waiting. All right. Grand Roofing, man. Thank you so much for hitting me up with these super chats, man. How many bad hurricanes do you think it would take to move the OSB and CDX price? I'm thinking the stocking up on a few more units of OSB. See, that's the difference. I don't, like, I mean, you have a really bad hurricane or something like that, then I would imagine, like, you know, you're going to start seeing some short-term impacts to the sheathing prices and stuff like that. I'm thinking, like, really your major concern is going to come from, like, whether or not you should stock up on OSB. I think now's a good time to at least, if you could, like, do like a dollar cost averaging into, like, depending on how many sheets you're planning on stocking. Like, if you're planning on stocking maybe like I don't know, 4 or 5 units. I mean, if that's like, kind of like, your limit. I mean, it depends if you're talking 50 units. I mean, how many units you plan on stocking? But like, I would imagine like, your typical roofing outfit with 5 units of OSB. I mean, that's like being 5 jobs ahead, essentially. Um, I don't think that's necessarily a bad idea, but I don't know if necessarily stocking up on that much of it, well, I mean, because you're going to go through it no matter what. So I don't see how that's going to be a bad move, really. I mean, could it go down from here? Sure. I mean, anything could happen. But if you were to buy a unit this month or this week and buy another unit next week and kind of like dollar cost average, you never know. You might be able to get a unit a little bit cheaper next month than this month. But is it going to be dramatically cheaper? Probably not. Like, I can't imagine it going that much farther down. Because you really have to think about it. Mills right now are all over the place shutting down, right? They're shutting back on production. They're cutting way back. The OSB market, in fact, I could tell you, the OSB market is like, and a lot of it is what they have is, they call them order files. Okay, so order files being like, you place an order with this mill and you're going to get your order in like 2 weeks, right? So at the height of the pandemic, those order files ran out to like 2 months or something. Like, they're you'll get at some point somewhere down the road, right? But now like the order files are shortened up to like 2 weeks, right? Which is really quick turnaround when it comes to OSB. Now, when you have that short of an order file, like if you call up and like, how far out is it? And they say, oh man, you can get it tomorrow. And I was like, oh really? Huh. How much is it? It's just like, 500. Oh, you take 425, right? Because you're like a week out, right? So, or less. That means the mill is like sitting on a bunch of inventory, and the buyers out there are knowing that, right? They can feel that at less than 2 weeks. They're like, yeah, okay, cool, right on, buys on, right? Let's see if we can make some deals happen. So once they get closer to that 2 weeks, they're like, yep, that's it. We're done. No more. Go home. Like, that's it. Take Friday off, whatever. And they stop producing. And that's what we're experiencing right now within OSB. So now, how dramatic will that be? Of course, the mill wants to continue to produce and sell. They don't want to not produce, right? I mean, this is what I find funny about the whole thing is like they want to make money, they want to make product, they want to push product out. They want to do a lot of that, but you can't do it at a certain level when it gets to a certain price. They're just like, man, we're out, right? And then the game is over. So that's the point that they meet when they get to that about that 2 weeks is that they start cutting back on production and and start holding firm on their prices, and they won't drop them any further than that. They'll be like, fine, we'll just sit here and we'll just burn through our production until we start running out of inventory, and we'll burn through everything we have. So again, like, I think now, like right now, when it comes to sheathing and lumber, like framing material, I think is a pretty good price right now. Could you get a better price? Yeah, maybe like slightly better, but I don't think dramatically better. You're not going to save like, an insane amount from it. Jake Northwest, $2. Thank you so much. Yield curve started uninvert. What does it mean? It means that we're going to run into a recession, right? See, the inverted yield curve really doesn't mean it's not the recession indicator. It's the recession predictor. The recession indicator is when it uninverts, right? And it goes back to normal, and that's when you start seeing all hell break loose. And you're starting to see it actually beginning to occur already. Now, what I think about like the yield curve, I have a tendency to start losing a little bit of like appreciation for being the recession indicator and the economic indicator that it once was. Only because there's so much hype, so much talk about it, and then I believe that there's a lot of manipulation within the yield curve placement of like the balance sheet, and how they are unwinding that balance sheet and how that impacts the yield curve. So there's a lot being said there, but basically the Federal Reserve is messing around with unwinding their balance sheet, but then also backing off on the unwinding of the balance sheet, which has its own story altogether within it. So with that being said, like, is the yield curve really indicating what's going on within the market perception, or is it really kind of just being distorted by what's going on with the balance sheet adjustments, the unwinding of the balance sheet and stuff like that? That gives it like this weird kind of like, effect of like something that would be an economic indicator from the past being present today. I just don't think that's necessarily the same. Am I getting that out right? I'm kind of stuttering over my words there, but I just don't think it's as useful as it once was. How about that? But it's still a really good indicator, and it still is predicting and falling in line a lot with, how people would typically use it to predict a recession, is that once it unwinds, you would have a recessionary pressure start to impact the economy. We're seeing it. So it's like, yeah, okay, I can get that. Here's the thing when I think about the yield curve. I think about what Alan Greenspan had said when he was asked that question. What do you think about the inverted yield curve in a recession indicator? And he said, although the inverted yield curve is a really, really good indicator for a recession, he said what he likes to look at is the spread between the 5-year and 30-year treasuries. He says when you see that spread begin to widen, it's a very good indicator of corporate management's willingness to invest and is usually a sign of good economic times. So that's the indicator I think that we should follow, is the spread between the 5-year and 30-year. And when you start seeing this thing dramatically rise, then that's when you want to be investing, right? I mean, that's not me saying, this is Alan Greenspan, right? Who's saying that this is when corporate management's willingness to invest, and this is the indicator of it, and that's usually a sign of good economic times. So that's what I have to think about the yield curve, right? Hey, thank you, Grand Riffin, for joining the channel. You're gonna really enjoy those member-only live streams, and thank you so much for being here, man. All right, I had a home inspector tell me today it's not the builder, it's the building supervisor. Huh. Big lag from yield cover or curve to actual recession. Yeah, recover. We've been in a rolling recession, haven't we? Well, yeah, I mean, I guess, ultimately, I think, like, after the great financial crisis, I don't think anything was really ever quite the same after that. You think about it, it's like after the great financial crisis, we had one of the longest expansions in history, followed by the shortest, deepest, quickest recession in history. That almost nobody noticed. Like, nobody even realized. Like, the economy goes through a recession, and typically we go through a recession every 7 to 10 years or whatever. It was like they happen quite a bit, right? And so when we came up after the great financial crisis, and we had, like, a decade go by and there's no recession, and then 11 years there's no recession, and 12 years there's no recession, everybody's just like, okay, you're gonna have to have a little pressure relief here, or else this thing is gonna end up crashing pretty hard. As it continues to build, the recessions are like the clearing out of the bad undergrowth, the malinvestments, all that other stuff. But the recessions were never, it didn't kick in. It wouldn't kick in, right? It just kept getting into this bigger everything bubble, and it just kept growing and growing and growing. And so it was like, ultimately, it was just like, well, this thing is going to just grow either gigantic, or it's going to completely explode if we don't do a controlled demolition, right? That's ultimately what it came down to. The shortest, deepest, quickest recession in history. Self-inflicted. Here, all the things that we needed, like, if you were to be surprised attack, you would have to have all kinds of government effort. They had it all planned, right? So here's this recession that nobody even realizes is taking place, totally is the pressure relief to a bunch of malinvestments that were out there. I mean, how many businesses shut down during the time, right? And now we move on. So how long does it take to get to the next recession? I mean, considering we just had one a couple of years ago, could it be another 4 or 5 years before we experience another recession? Yeah. It's weird to think, like, how Janet Yellen said that, back in the, like, everybody laughed at her too, but now it's starting to make a lot more sense when she said that she doesn't believe that we would ever experience another financial crisis in our lifetime. And now I kind of related that to a recession, but that's not what she said. She didn't say that we wouldn't experience a recession. She said we may not ever experience another financial crisis. And now I always related that to the recession, but that's not what it was. So she might be right about that, that they have conditioned this economy, the system and everything, to actually create the recessionary events. And therefore, there never really truly a financial crisis that would come from it because they're self-inflicted wounds. Yeah. That's something to think about, I guess. Yeah. Alrighty, guys, we're going up onto an hour. We got 186 likes with 300 people watching. If you want to continue going, just go hit that like button. Get it up to 200 likes in the next 4 minutes here, and we'll continue the live stream on for another 15 minutes or so. Did anyone else see the yield curve is quickly starting to reverse the inversion? Usually that makes a recession, and the bond market is signaling it with Japan. And see, now you think about this. This is at the same time. This is at the same time that the Federal Reserve is not only reducing the amount of balance sheet unwinding they're doing, which is kind of weirdly weird to think about, but they were reducing their balance sheet by, so much. Now they reduced that by this much. Okay. That effort alone is creating liquidity for the bond market. At the same time, the Treasury is stepping up, providing liquidity for the bond market. And you have the Federal Reserve threatening out there that they're going to be lowering interest rates going into the future, which actually has people very encouraged about buying into the bond market when they have this idea thinking that the yields are going to be going down and the prices would be going up. You think about the credible threats that are at play right now, and that really the entire time you have to think like the effort that is being done here is it is an attempt to try and raise the neutral interest rate. Like you got to think like at the end of the day, what is the Federal Reserve truly wanting happening here is they want to have that neutral interest rate to move up. And now if you are in a situation in which that the inflation expectation is going to run elevated and that interest rates may stay up and all hell or whatever, then you're probably going to have a belief that the inflation and the interest, all the other stuff is going to start forcing that neutral interest rate to rise. I mean, this is something that we were talking about earlier today, but I think this is even more important to understand now than ever because I think this is the moment that it's actually starting to get noticed by the markets and by the people. Like they're starting to recognize this. They're talking about it and they know it. They see it. Like, do they know it to the level of, that we talk about here on this channel? I don't know about that, but they're starting to pick up on it and they're starting to clue in. And so as more people start to realize that this is what the Federal Reserve is up to, they are going to have to conduct themselves in a way that starts to create the situation that is now, how can I put this? If they don't have the confidence behind the market in order to adjust those rates in a way that they do believe, then it won't work, right? It all begins to fail. And so I'm trying to I'm trying to think this through out loud here. But ultimately, like the Federal Reserve cannot just like lower interest rates or raise interest rates without the credible threat being, persistent ahead of time. And in that fashion of which they do it will really dictate like how it is that those markets will be reacting to it in the long run if that raises the neutral interest rate. So you got to think, okay, I'm really talking in circles here. Hold on. So to understand like the neutral interest rate is the rate that is neither impacting or neither restricting nor accommodating the economy. It's neutral, right? And now the Federal Reserve, when they go to stimulate the economy, would have to drop somewhat below that neutral interest rate in order to stimulate the economy. However, they ran into something called the lower bound of zero. Right? So now the neutral interest rate is also very close to zero, which means that stimulating the economy wasn't happening. Now they got the Fed funds rates way up here at 5.5%. And what that does is it starts driving the neutral interest rate up as people have this inflation expectation running persistently into the future. It will start forcing elevated, right? This will start bringing the neutral interest rate ever higher, but it takes time for this to occur. As the you will find is less restriction taking place to the economy. If that less restriction to the economy begins to take place, you may find inflationary pressures and, consequences to what the Federal Reserve is looking for begin to take place. that would force them to have to raise rates. See, this is really where the possibility of rate raising could come in, is if that neutral interest rate was to rise. Now, if people begin to recognize that this is what the Federal Reserve is up to, it will fail, right? It will stop. It will begin to. The whole monetary policy effort that is coming from the Federal Reserve, the strategy, will no longer function the way it's supposed to, because people will begin to recognize it, right? And so if they start to recognize this neutral interest rate and that the Federal Reserve is attempting to raise this up so that they can have their ammo back and that it's actually becoming less impactful to the economy, then it will fail. It will begin to not work. So this is part of it. Like recognizing that there was even an article today that has this kind of information out in it. If you start finding where it becomes prevalent talk within the mainstream media, it becomes propaganda, then you know that things have shifted, right? Man. Sorry, guys. I just kind of went there. But when I $5, 300 and see what happens. All right, we're at, didn't quite get it to the 250, but that's all right. You guys are cool. All right. What do you think about T-bill and chill? Yeah, I mean, I guess it all comes down to is if you have faith in the dollar. Like if you don't mind sitting on dollars, and even really T-bills are pretty short term, so it's like you get your money back and you just keep just rolling that back over. I mean, I don't. I mean, is it beating inflation? Kind of. Like inflation's down at what, 3% or something like that? I guess it depends on what kind of inflation you're looking at. And if you can beat it with a 4% yield or something, then I guess it's a fairly safe place to be at. A lot of people were there, they said like, they were talking about all this great return that they get inside of the treasuries. And, so I mean, I guess it's a safe place to be. I personally, I find that there's probably other places that I would rather be. Because I just think that there's buying opportunities out there that you need cash for. But if I was looking for that fixed income, on something, then yeah, I guess treasuries would be all right. All right. I tuned in late. What is lumber doing? It's crashing. It's crashing, and the prices are going to keep the mills from producing more, which is going to tighten up the inventory. And the moment the home builders snap out of it and start building, that there's not going to be much inventory out there and the prices are going to skyrocket. So it's the same thing I keep saying over and over again, but it's becoming evident now, right? I mean, it's just like, it's obvious now when you got lumber down at $450 per thousand, I'm surprised that the mills even show up. Like they're like, that's it, we're out, And so you can see, like, this is the problem in the middle of summer. Like, this is crazy to think about. Right? I mean, last time I talked like this was right before the pandemic was kicking in. That's a good way to wait for good deals. Yeah, that is. I mean, it really is. Because it's pretty close to cash. I mean, you're fairly, you're within, reason of being back in cash. What is going to cause the Fed to cut rates? Unemployment. Unemployment rising would cause the Fed to cut rates, because you think about it, they're a dual mandate. They're only mandated to do two things. People, I think, misunderstand what it is that the Federal Reserve is mandated to do. They're mandated to keep low and stable prices of around 2%, whatever that means, because nobody really knows, and full employment. Now, this is a pretty interesting one to understand, because full employment is something that they have actually changed the way they actually view it, because there was a time in which that the Federal Reserve would use employment to adjust their inflation, right? So if more people were working, there was more demand. More people working, more people have money, more consumption, more demand supply imbalances, then you have prices moving up. Same thing on the opposite side is that when you have less people working, getting laid off, there's less consumption happening, and then all of a sudden you have supply outweighing demand, and the prices come back down. Now, this is typically how the Federal Reserve would mess around with the economy in order to get to the inflation levels that they were wanting. But they found that that doesn't work anymore. Like, you can have full employment going on with historically low unemployment and still not get the inflationary scenario that they were looking for. Like, you can go back to the Obama administration, all throughout the Trump administration. It was proven time and time again that you can have about as much employment as you want, Nowadays, after the great financial crisis and the hitting of the lower bound of zero and the neutral interest rate going to zero, the neutral unemployment rate or the neutral employment rate had also come very close to zero. So trying to stimulate the economy with like lowering the unemployment rate didn't work. You couldn't get the inflationary scenario to take place because of it. So the Federal Reserve realized, it was just like, well, shit, now we can just run full employment no matter what. Like, we don't have to worry about inflationary pressures. We just have to just be constantly running at full employment all the time, right? And that's now their new strategy because, again, like, they needed inflation. It was something that was actually interfering with their monetary policy. Most people don't realize that. They think that the inflation is their problem. It wasn't. It was their reward to, it wasn't their problem. It was their success. That's what I should say. It was their success in order to get their monetary policy back. It totally worked, right? It straight up worked. So again, going back to the question, what is it going to take for the Fed to cut rates? Well, they have that dual mandate, right? Low and stable prices and full employment. If unemployment rises significantly, it's part of their dual mandate. They are mandated to do something about it. But until then, they're not, right? So as long as unemployment is still historically low, even at 4%, it's not 6 or 7 or 8, right? 4% isn't like that bad. It's bad considering recent history, but not that bad, right? It's just slightly bad. So unemployment isn't rising significantly to the point that the Federal Reserve is that concerned about it. And inflation is coming down. So, as far as I can tell, the Fed is winning. They're winning their battle. This is what they wanted to do. Why would they cut rates and screw that up? Right? If it's going right, why would you screw it up? So they're not going to cut rates, right? Why would they? As long as there's full employment and inflation is moderately above 2%, then they're achieving their goals. And that's what I see happening. It's like everybody's anticipation of the Federal Reserve's next move. And I'm thinking the Federal Reserve is perfectly aligned with what it is that they were attempting to do. So what is it going to take? Probably some rising unemployment, right? Because inflation moderately above 2% is exactly what they were wanting. Or modestly above 2%. I don't know, whatever that means. All right, let me cruise back down here. We got 242 likes, 294 people watching. Love it that you're all here. Okay, if you're in the chat, hit the like or even the unlike. Just tickle the algos. It's free. YouTube likes it. Simon likes it. Come on, click equals more than a smile. Thank you very much, Wayne. I appreciate that. And that's absolutely true. Not just hitting the like button, but hitting the thumbs down button too. Making comments. Everything about engaging within the YouTube video and the chat and everything else is algo loving it, right? They just absolutely love that stuff. And they pick up that video and spread it around for more people to join in. What else do we want to know about lumber? What do we need to know? All right, with the boomers hitting retirement right now, unemployment won't be a big fear as more people are leaving the workforce than entering it. Yeah, I agree. Will. And that's another reason why I just don't see the Federal Reserve being very adamant about moving their interest rates. It was just we're going for a 2% average inflation rate over time, right? With no mathematical formula to figure that part out. And we have full employment with low unemployment and retirees running rampant through the economy with very few people to occupy those positions. The Federal Reserve is just man, we don't have to worry about that part of our dual mandate at all. Or the inflation one. Both of them are a total success. According to the dual mandate. Now, whether or not it's a success to the rest of the economy, I'm just talking about those two mandates, right? All right. Yeah, unemployment will pick up probably. I have a friend in Chicago says everyone is looking for work now. He has 50% less turnover. Will it take a recession to cut rates? I don't know. I guess. If you, because typically, what's the worst part of, I think we've already been through the recession. That was the whole thing. I think it's the recession-less recession, right? I think we already did it. Everything that already happened. And so to think that we're going to go into another one, I don't know, maybe, I guess, possibly, but I think we already papered it over. We already pre-bailed out all the corporations, you know, lost their job. People lost their job during the pandemic, but then they got it right back because then there was, more help wanted, something you could, shake a stick at. So I think that it's already been built out. I think like it's the recession-less recession. Yeah. Okay, now let's go for 300 likes. All right, we're at 257, 275 people watching. It's an hour and 11 into this. What do you consider good opportunities if you had cash to deploy currently? I don't know. Like right now, I still this dollar cost average into my stuff. I don't really see like really great opportunities or anything like that. Um, if you were asking me of a possibility of one, I would certainly keep an eye on the lumber industry. That one right now is in shambles, and I think that that one has an opportunity to reverse, right? So whether you dollar cost average into, one of the mills or a group of the mills or, one of the ETFs that are out there or something like that, I think now is a good opportunity inside of that, considering how low the market is and how long it's been down. It's only a matter of time before we find a reversal of that. And I think that that moment should be coming, in the next, I mean, if not in the next few months, I mean, I don't think it's going to happen in the next few months, but it might happen in the next couple of years. And dollar cost averaging during the down times, whenever you see the dips or whatever, I think that's probably a good opportunity. Now, whether or not you're looking at the lumber industry itself or the home builders or, the whole group as a whole, like there's different timings and everything else within that. So, whether it takes, 2 years from this point to the time that you would want to sell, or if it takes, the next, 6 months to a year to complete your purchases, and then you sit on it and wait till, sometime in the future. I don't know. Like I am not a financial advisor. I don't know anything about any of that stuff. But that's kind of like how I see it. Is just like, to me, I'm looking at the lumber. I'm like, man, this is unloved. This is like getting hammered. It's only a matter of time before this reverses, and when that does, you're going to start seeing these prices move up. It's just an opportunity that I see kind of growing there, right? Growing. Anyway, lumber ETFs. Yeah, there's a few of them out there. And again, like I don't want to be like the type of channel that tries to encourage you to invest into a particular direction. Like, oh man, if you invest in these particular mills and all that, we're all going to be rich together. Yeah, hey, like I mean, go for it. If you can figure it out, go for it. I've had other people use this information and made a bunch of money in the lumber futures market, trading commodities, doing whatever. Hey, that's cool. I'm glad you're all able to do it. I mean, I personally, I'm just taking my road, which is probably going to be a lot safer than what most people are looking to do. But, take it for what it is. This is what I see going on out there, and not a lot of people know it, right? Not a lot of people see what's happening within the lumber industry. They don't realize what's going on with the mills. They don't know what's going on with the inventory. They don't think about it when it comes to like where the builder demand is coming from, and how it is that could just simply off of a psychological shift in buyers' sentiment or whatever. It can all change quite quickly, and I really see that kind of being a moment going into the future. You really think about it, the majority of the Federal Reserve's monetary policy is psychological. Like literally the majority of it is. It's got another super chat down there. Let's go check it out. Grand Roof Incorporated. Man, you're really hitting me up tonight, man. I really appreciate all these super chats. Does he realize all of the memberships? What a great guy and channel. I have a lot of memberships. We're probably pushing 600 members to the channel. Like, I don't think people quite realize how valuable that membership really is. Like, I mean, I put out a lot of information when it comes to putting these videos together and stuff. I kind of cut off the cuff with a lot of like information as far as just things that I remember and some of the little bit of information that I kind of share with you guys when it comes to these live streams that I do. But when it comes to those membership only live streams, we're breaking things down hardcore. Like we're taking like monetary speeches, Federal Reserve speeches, going through them word for word, and then really having a discussion about everything that they're talking about within these speeches and internalizing it into the point that we really know what they're talking about. Like, taking it in as if we are part of the discussion with them, right? And now, once you have done this, then you can really see that there is a couple of communications taking place, right? There's the propaganda main communication that most people are aware of, and then you have their actual communications that they use with the other central bankers. That's done through these speeches. Only live streams are all about is breaking that communication down. We understand it, we recognize it, and we see it. We learn things about banking reform and the Basel III endgame. I mean, Michelle Bowman does a great speech breaking all that stuff down, talking about how we have to tailor this rule for global governance when it comes to banking within our, domestic system here. I mean, not a lot of people are having these type of discussions talking about Basel III and the end game and stuff, but we do. We have that discussion here on the Uneducated Economist in those member-only live streams, and they're so worth it. Like, I mean, I know they're valuable. I know they're worth it because of all the commentary that I get from people telling me. It's just like, man, you would not believe how much I now understand about the economy by you breaking these things down and having these discussions. Thank you so much for doing this. And you think about it, it's $1 a month. It's like the cheapest subscription that you could ever possibly be part of. All right, $12 a year. It's like I set that up on purpose. I made it the cheapest subscription so that it's accessible to everybody. But you're going to be serious if you do it. And that's why I did it. It's because anybody who is willing to take the time to go and sign up and pay $1 to be a member of that channel is taking it seriously. And now you're part of a community that is also taking it seriously. Right? I mean, it's just like there's nothing that you can knock. Like, there's no, what am I going to say, there's no bad reasons for joining the channel. There's only good, right? There's only better information, better understanding, better communications. And I mean, I can't brag it up enough, but it's done so much better than I even hoped it would. That's what's really crazy about it. I don't even push it that much because of the success that it's already done. I'm figuring it'll sell itself. Like, the people who are already members of the channel are pushing it for me. Like, they're like telling their friends, like, dude, you have got to check this out. This is how you do it. This is how you learn how economics works, right? Is you break these monetary speeches down and you have discussions with other people who are serious about this topic. I mean, I can't brag it up enough, but it's like seriously, like, it's growing all on its own, and I kind of like I push it a little bit, but I don't push it as hard as I once did, and it's doing quite well. So thank you, Grand Roof, for not only giving that shout out, but thank you for all these super chats you're hitting me up with too, man. I really appreciate it. Another $2. I don't know why, but I just like hearing him go off this as well as other topics. Grab, hit the likey. All right, we're at 280, an hour and 19 minutes into it. I'm glad you guys are having a good time, man. I love doing this stuff, man. I mean, I love being here. I love being, sharing my thoughts, my research and stuff. It's just like, I don't know, man. It's just, I can't thank you guys enough. Yeah. Man, here comes some more, man. I appreciate you, bro. Hold on here. Post poop zombies. I got to read his comment. I've already hit the like button. I can't hit the like button anymore. All right. Knowledge is power. 19 more likes for the next gift. All right, on. Well, let's do it, man. We're at 223 people watching right now with 282 likes. That's pretty cool, man. I love it when I have way more likes than I have people watching. I think that's really fun to watch. But go hit that like button. I'm sure there's a handful of you out there. If we get it up to 300 likes in the next 10 minutes or so, we'll continue on hanging out. Otherwise, we'll just call it an evening. But Grand Roofing really wants to keep going, so I've got another nifty 50 to give away. Well, right on. Well, help me out, man. Grand Roofing wants to continue on, so go hit that like button. We keep it up to 300 likes, and we could keep the live stream moving here. Simon, having a family, do you ever get lonely? Clear Glass Studios. Listen, man, lonely is a weird feeling, right? because you would think with the family, no, you wouldn't ever get this feeling of being lonely. But to be honest with you, no, I do get that feeling. Like, I used to have a lot of buddies that I would cruise with and go do things and hang with and fishing and all kinds of stuff. I don't really have those buddies anymore. Right now, I know a lot of it had to do with like, a lot of it had to do with me and like, moving away from like drinking alcohol and doing some of the activities that I was once engaged in. And so it's just like you kind of lose touch with a lot of people. But it seems the older you get, the less closer contacts that you have with people, right? The more like isolated you end up becoming with yourself, by yourself, or maybe just within, a much tighter, smaller knit group of people. And yeah, I found that to be the case. Like there's times where I think, it's just like I get through all my stuff, get a live stream out, get all done. The family's got something going on. I'm thinking, man, I can do whatever I want. And I'm like, man, I don't even know anybody to go hang out with. Like, I could think of people, but it's just like, man, they're at work or they're whatever. And I just like, man, I got nobody around. And so, yeah, you do get lonely. Now, a lot of times people say, well, how can that possibly be? You got all this attention on YouTube. You can just go and talk to all these people. You got 140,000 people that you could possibly communicate with. Yeah. And that does give you, a little bit of sense of like, yeah, there's a, bit of a community out there. And yeah, there's a lot of people, especially some people that I've met through YouTube that I know I could go in contact and, became really close friends with, I mean, hell, even George Gammon. I mean, I don't see him every day. I don't talk to him all the time. But if I called him up and say, hey, man, I need to, you know, love to chat with you for a minute, I'm sure he'd give me some time, right? All-nighter, told, bro. I mean, it was just like now we've gone to so many conferences together. It's just like I mean, he's like a brother. I miss him. It's like, where you been, bud? Where you at? So yeah, everybody feels that way. And again, I think it's probably from growing older. The older you get, the more you probably feel like that. Yeah. When you're a kid, it's easy to make connections and attachments and all kinds of stuff. But the older you get, it gets harder. Grand Roofing, you're a good gift. You're a good guy gifting the people those memberships. Come chat, hit the like. All right. Grand Roofing with another 5. No, not yet. A few more minutes. If we get to 300, I'll gift another 50 memberships. Wow. What are you gifting membership? All right. Jeff Welch, thank you so much for the $10, man. Congratulations on all the memberships tonight. Yeah, thank you guys, man. I mean, I really appreciate you all jumping into the game. I mean, it's like, I don't know, man. Like, this is something I never expected or anticipated to do. I mean, but now that we're here and we're doing it, man, I can't imagine myself doing anything else. I want to put this information together. I want to get it out there. I want, everybody who is hearing it to be able to use this information to better their lives. And that's ultimately it. That's why I push it as much as I do and try to get it out there for, to try and give everything away as much as I can. The limitation of the subscriptions to the membership only is very small. Like, it's a very small limitation on there. And again, it's just like, trying to, dedicating this time and effort and everything into it. It's a love, man. It's not like it's not a burden to me at all. It's not at all, is it a burden? It feels very much like a reward to do it. And to be able to have a community that is, so involved too. It's just like, man, I couldn't ask for anything better. This should number like I'm 5. Lumber like it's like at 5. Okay, so people make lumber, but the people who make lumber aren't getting paid enough for their lumber, so they're not going to make as much of it. Okay? And so since they're not going to make as much of it, what's going to happen is that the inventory, which is all the lumber out there in the world, is going to start getting less and less. And then one day, people who like to use lumber, well, they're going to get real busy and they're going to wake up and they're going to say, hey, I want lumber. And when they go to buy the lumber, there's not going to be that much there. And then what you're going to find is that the lumber price is going to go way up because there's not a lot there. And the people who want it are like, hey, we don't have enough lumber, so we're going to pay a lot of money for it. And then the mills are going to start running up production and they'll start producing more lumber. Does that work? Was that? Grand Roofing, thank you so much for the $2, man. Incoming, my job here is done. Mic drop. Thank you so much for the 300 likes, man. I really appreciate you. And thank you all for being here. We're at 263 people watching with 305 likes, $67.99 in super chats. You guys are amazing. Thank you so much for hitting me up with those super chats and asking all these really awesome questions. Becoming a member of the channel. I mean, look at this. You fly through these comments and it's like all these members to the channel are just constantly in here. It's just amazing. You know, I wanted to give you guys like first priority to reading questions and statements and stuff, but there's so many of you. It's like it's almost like it's a member only live streams as is. All right. Let's cruise down here to the bottom. All right. I only gifted 30 tonight. It's all Grand Roofing for the gifts. I'm glad someone else gets the same value I'm getting and is fortunate enough to gift subs. Man, this is awesome. You guys are so cool. Thank you guys, you know? Not just greed, fear too. Very educated for someone who's self-taught. Well, thank you, Matthew. Yeah, and it really is. It's like it was all self-taught. I never taken a class. I never took an online course, never did any of that stuff. I just literally went to Google and just kept asking questions. It was really a failure. It was like when my house was going into foreclosure that I really started like, what in the world? And so I just started going to the computer, like, what's a mortgage-backed security? What's a credit default swap? What is? And I just never stopped asking. And, the more I kept asking questions, the more questions I would have. And I just kept diving deeper and deeper into it. And really, you guys saw the bulk of me really like opening up the floodgates and pouring into it after I started the channel. Like I was really interested when I started the channel and I thought I knew like, a little bit more than like say like, the average person around me or whatever, because they basically told me that I talked over their head anyway. So I was putting this channel together, but I really, was still learning quite a bit. And so it was trying to put these videos together and doing the research and stuff like trying to, come up with that is really what drove me deeper into figuring out what was going on. And then really started driving me into monetary policy. So, yeah. Q, you're always on my mind. All right. What is it by SWV? In your opinion, in John Williams' position, I think you asked me this one before. I don't know. Let me see here. In your opinion, in John Williams' position on neutral rates, would you say the Fed were to reduce interest rates, they would be crashing the economy intentionally? So let's think about this for just a second. Because, like, I don't know if my opinion and John Williams' opinion is going to be the same, right? In your opinion, in John Williams' position on neutral interest rates. So I don't know what John Williams necessarily would be, but like, let's think about that. On the neutral interest rates, would you say if the Fed were to reduce interest rates, they would be crashing the economy intentionally? If they were to be reducing interest rates, they would not be crashing the economy intentionally, unless you think that maybe, well, here's the thing. How much are you talking about as far as reducing the interest rates? Are you talking reducing it down to neutral or below neutral? Because even if you were to reduce just a little bit, you're still fairly above neutral rate right now, which would still be restrictive. Right? Give it time and the neutral interest rate was to rise, then it would be less restrictive. But just because the Fed drops rates right now doesn't mean they would be stimulating the economy. In fact, lowering interest rates right now would have the market perception of actually stimulating the economy, but it wouldn't be a stimulating effect from the interest rate cuts. It would be a stimulating effect from easing of financial conditions due to the market perception of what's going on within the economy, because that has more impact on the economy than the interest rate adjustments do. I don't think any of that would crash the economy, and I don't think that they would do that just willy-nilly, right? So if they're going to actually communicate and believe that they are intending on doing an interest rate cut. Now, it's going to be very well communicated and not some like vague possible interest rate cut like we're experiencing right now, right? See, this is like, to me, this is keeping an open-ended policy. By keeping the interest, by keeping a perception of isn't there, is there going to be like 2, 3, is there going to be a rate hike? That's like an open-ended monetary policy that the Federal Reserve is looking to continue. They want that. The moment that they need to either create a restrictive position or a easing in financial conditions, all they have to do is communicate that through their statements and propaganda through the mainstream media. They won't have to do anything with their interest rates. So that's important to understand, is that once they have closed that open-ended communication and they move into like, we are going to cut going into the future, it's just, it's just a matter of like, this timing, we don't know how much or whatever, but we are going to cut. Once they have communicated that solid form of communication out there, the easing of financial conditions will be like full blast. It'll be moving. You were talking about how luxuries is a man's cause of the cost of things going up. I don't think it's the luxuries. I think it's the rise in the standard of living that does it, that causes things to move up. The luxuries is what starts driving domestic manufacturing out, right, and brings foreign production in. But I think that's kind of neither here nor there. But anyway, it kind of relates to it anyway. All right. Luxuries is the main cause of the cost of things going up. I remember the example you used of a typical person buying 2 steaks instead of 1 and whatnot. This slow transition. Yeah. Because, I mean, you think about it, it's like, because that Cantillon effect, when you think about how that works, it's really like a 7-step process. Like, I don't know if you guys heard me say that one before, but really it's like a 7-step process that you go through, right? You have like the industriousness of the people that figure out something, like they become productive at farming or manufacturing of something or whatever service, whatever they do, they become industrious for whatever reason, right? And then what ends up happening from that is you go into production and savings, right? So you're industrious, you produce and save. Once you produce and save, you start moving into a higher standard of living. And this is now the same thing that you're going to find no matter what. It's human nature. If you work hard and you have produced and you have saved, you are going to want to enjoy it. You're going to want to have a nicer house, a nicer car, nicer clothes. You're going to raise your standard of living. And now that raising a standard of living is going to start creating a situation in which, what? You're going to move into luxuries, right? So once you have raised your standard of living and you have that nicer car and whatever, it's going to start bringing in these luxuries. That luxury starts driving out domestic manufacturing, right? And starts driving in ever increasing amounts of foreign production. Right? Eventually, it turns off and everybody falls into poverty. Now that's a quick run through of the steps that it goes into, but that's essentially it. Right? Once you have produced and saved and you raised your standard of living, if you start buying into, like, you raise your standard of living, you can have the house, you can have the car, you can have the stuff, right? Because all this is like, the production's a means of like, enjoyment, and you can really sustain that. But once you start moving on, right, you start saving ever more. Now you want a nicer car, nicer house, nicer stuff, and all these other things. That rise in the standard of living, that rise in the consumption of luxuries, that starts throwing the supply-demand imbalances out. Once you have supply-demand imbalances out, you have prices increasing. Once prices increasing, foreign production finds its way in. So this is the same thing that's going to happen no matter what. If people could just raise their standard of living to that first initial point where they're like, hey, the production of our land is enough for us. And we don't, and anything more beyond this, we can produce and send out there. But anything that we produce and save, right, we have to reinvest back into production and savings. The moment that we the moment that we spend that into a higher standard of living or moving it into luxuries or consumption, we're gonna kill it. It's gonna crumble. And you can't stop it. You can't stop it because it's human nature. Right? Human nature says, I worked hard, I want to enjoy my production and savings, and I want a nicer car, nicer house, nicer stuff, and, the steaks. So yeah, you're absolutely right. $20 from the Grand Roof, man. Thank you so much. I can't believe it. We're up to $87.99 right now. You guys have totally done it. I gifted 120 memberships. Wow. Are you serious, man? Knowledge is power. Never quit learning. Learn, provide value and service to others. That's it. Society will have you think otherwise, that you need a degree. Or think oh man. Society will have you think otherwise, that you need a degree. That will enslave you. Man, thank you so much, bro. You guys are so generous, man. I really appreciate it. 322 likes with 221 of you watching. I love it, man. Absolutely love it. Alrighty, guys. Well, I got to keep going if you're having this much fun, right? All right, let me back it up here. The longer you do, the further ahead you get. Thank you, Grand Roof. All right, on. Midnight Rider. Look at all these. All right. It all comes down to how long you can delay gratification by not spending your savings. That's right. Invest in yourself. No one can take it away. If you learn, read a book, listen to Uneducated Economist. That's it, man. Thank you so much, Wayne. Whatever you buy is costing you your own future. My grandpa said this to me. If he said something, I listened. I will keep my old paid off stuff. Yeah, awesome. Right on. You guys are so cool, man. I really appreciate, everything that's going on here. This is it, man. I mean, what else? I mean, who else is going to do it for you, right? I mean, I don't know what it was that got into me that had me getting this channel going. I know it was Brittany. It was Brittany. Right? Brittany did it. She was like, hey man, I'm tired of listening to you. Go down there into your car and go make a video on YouTube or something, because nobody up here likes listening to you anymore. So I have to thank Brittany, because she's like one of the coolest people out there for being so blunt and straightforward with me, that actually got me off of my ass and moving me into a YouTube channel. But how it is that I got here is just beyond me. Like, I never thought that I would be breaking this stuff down as hardcore as I feel that I am, in a way that I don't think anybody else is doing, in a way that I feel like is so not only unique, but also like so vitally important. Like, I don't understand how anybody else is looking at the Federal Reserve or looking at the economy without understanding it from this position. Like, if they don't see it like this, or at least don't understand that this theory exists. It's not even a theory, it's the reality of it. That's what gets me. It's like, it's not even my theory, right? It's like, I mean, I guess a lot of people call it my theory, but it's not my theory. It's like the reality of the situation. I mean, I'm not making this stuff up. Like, it's not like, hey, I'm coming up with this idea that it could possibly be. Like, sometimes I do that with my opinions and things. But when it comes down to breaking down the monetary policy, man, it's just like, it's not me. It's their own word saying this, All right. Old lady is like, go down in the car with that stuff. All right. I remember your old car with the headliner. I still have that car. I'll do a video from that car. Good for you, man. I do. I have that car out in my barn. All right. My grandma moved from northern Minnesota, is that it? To New Jersey to work in a chemical plant when she was 16, 1932-ish. Wow. Hey, thank you so much, man, Grand Roof. I can't believe how much you've done for the channel today, man. This is incredible. Don't forget to look the video up about Gresham's Law on Grand Roof Incorporated. Yeah, absolutely, man. In fact, I will go find that video and I'll put a link to it on my community page as well when we're done here. But yeah, in fact, maybe send me an email on it if you could. Just send a quick link to uneducatedeconomist@gmail.com so I don't have to go searching for it. I'll have it right there. And I'll post a link to it on my community page. Let's see here. What countries have a healthy or ideal economy? I don't know if there's an ideal economy. Like, I don't know if there is an ideal one. Like, if somebody was like just absolutely killing it right now, rolling in all kinds of money and just like living it up, I mean, would they be like, man, this is an ideal economy, this is perfect, right? So it's not really an ideal economy, in like, there isn't one. Like, not in my opinion. Like, there is no good or bad economy. Like, I don't, it's a hard question for me to answer, because I would think like, okay, so you're looking for like what is generally best for like the broadest amount of people or something like that. And in my opinion, in that case, it would be capitalism. Like capitalism would be the best for the most amount of people. But there's no real good example of capitalism without there's some kind of like crony aspect to it, where like, you end up with some sort of private gains and public losses that take place because of it. So I don't see an economy as being a good or bad thing or something that is like an ideal one. I don't know what that would look like. All I can imagine is how it is that I deal with the economy, like my ideal position or how it is that I'm supposed to interact with what it is that I see happening at the time that is going on. Because there's no way that there is anybody or group or a set that's going to make it good or right for everybody. It's just like it doesn't work like that. It just can't. And so I don't try to think or theorize on ways that it could, because I don't see that I don't see how that could happen. Instead, I think it's better to just look at the situation for what it is, whether good, bad, or ugly. It doesn't make any real difference. It's more about how it is that you plan on dealing with that. Now, it could be better, it could be different, it could be a lot of things, and we could wish and hope and dream and pray for it to be different and all that, but it's not going to change, right? None of that's going to be any different from what it is that we are experiencing. We have to deal with what it is that we are experiencing, and that's all there is to it. So, I mean, we could try to vote for the right person to get in there and make the right decisions, but I don't know what that would be. Like, because the right decision for who, right? I mean, is it the right decision for me? That's kind of selfish. I mean, what about everybody else out there? I mean, screw them. I mean, I'm cool with that, but I don't know about how everybody else is going to feel about that. And I certainly don't want to deal with like an ideal situation for the masses, because I'm not going to be part of the masses. I want to be off of my own individual person doing my own thing. So if they want to create an ideal situation for the masses, that's not for me. Like, okay, that's great for the masses, but I got something else going on, and so whatever ideal situation you have for them is not the ideal situation for me. Right? So no matter what, it doesn't work. So I just think about it the way it is and then try and deal with it that way. Zimbabwe just backed their currency with gold and made a new currency backed by gold. Yeah, let's see how fast and how quickly that gets hoarded away and how awesome their economy booms because of it. All right, let's watch how that goes. See, what's funny about it is that because the Zimbabwe dollar or Zimbabwe currency was such a failure, they really only had a couple of forms of currency that they could actually use, right? And gold was a very prevalent one. This happens in any currency, any economy in which that you have a collapsed currency taking place, especially one where you're like trying to institute these legal tender laws and stuff like that. Essentially, nobody will have any confidence in anything else, but they will accept gold because, well, gold's worked for 5,000 years, and there's no reason to believe that it won't go into the future. However, if they do back their currency by gold, I would imagine what you're going to find is that there's going to be a very limited amount of commerce that's actually going to be taking place, right, within it. The most industrious people will hoard the gold. You might find some interaction for a while, and I'm not trying to say that there's not going to be any kind of economy taking place because of it, but if you give it enough time, you are going to find that there's industrious people who will hoard all that gold for themselves. They will take it right out of Zimbabwe into wherever they're going to go with it, right? And I mean, in Zimbabwe, we'll be left with no gold. It's just need things just need to get much, much worse, and people will start to figure it out. I don't think it will. I don't think people will. Instead of backed by gold, just use gold. And again, like, if you had gold in that nation, I'm telling you, man, like, if you have, I don't care where you are, if you have gold anywhere, you are going to find people who are going to go to that place, become industrious, take the gold, and leave it. And leave. Like, leave with the gold. Right? And then that place will be without gold. I mean, it's, you know how I know that? It's because of this book right here. Right? Because he talks just about that exact same thing. He talks about how it is that kings realized that they were an industrious nation that hoarded a bunch of gold, raised their standard of living, and now the foreign production is forcing that gold out of their nation. They make it illegal to export gold. They just straight up just like, no, you can't leave our kingdom with that gold at all, period. Because they know if it happens, they're gonna eventually be in ruin. Right? So they just make a law that says you can't do it. Well, guess what? You make a law against something that somebody wants and you're gonna create a premium on that. And that's exactly what happens. So he describes it way back in the day. Right? You try and create a situation in which that you are using gold and you make it a law that it has to stay there, you are going to create a premium of exporting gold. You are going to make a black market that is worth so much money to try and get that gold out of that nation. It's just, I don't know. Like sometimes, like once you kind of figure this stuff out, it's just like you kind of just internalize it to the point you just see it. Like I can't see, like I can see where it could work for a minute. Like, hey, look, it's working. And it's just like, okay, we'll give it some time. We'll see what happens, right? And it's going to be the same thing, right? The economic forces that are underlying will eventually play out. Driving and catching up to live building our house currently in Colorado. Hit some good deals on lumber, steel, and windows so far. Right on, Caleb. Yeah, you're probably going to do well if you're building right now. You can't use gold because of Gresham's law. Gold will be hoarded instead of spent. That's right. Right on. Welcome to the channel, JCG33. Gaddafi, dinar, I think it was called. Saddam both got some gold, and look how it worked out for them. Yeah, see, it wasn't going to. Oh, there's a deer right there. Let me see. There you guys. Let me show you the deer up in my yard. Can you see her right over there on the other side of the satellite dish? All right. Anyhow. Yeah, and you can see how it didn't work out very well for them. Like that would have worked out really well. They would have been able to export all this gold, all this oil, get all this gold in, and they would have been able to hoard all this gold. Well, the problem with that is that the same thing that everybody was going to face is that he who has the gold is kind of like the king, and there's no way that the United States was going to allow something like that to happen. Like you had to do the deals in dollars, period, end of story. And so they killed Gaddafi, they killed Saddam, and they killed just about anybody else. But now I think they're getting to the point that they don't really even care. They don't need it like they used to in order to keep that petrodollar going. See, right now, the dollar is in such high demand from being the source of all the world's contracts, right? Like everything is contracted in dollars. So regardless if they start doing deals for oil and other kind of currencies, there's not enough of those other currencies in order to facilitate the trades. They could do some, but they're not going to be able to do a lot, right? And the only way they can do a lot in that other currency is if they do the one thing that the dollar is doing, and that is to be an issuer of an insane amount of safe and liquid assets like U.S. Treasuries, and then provide the world with dollars by going into deficit trade. Like, those nations aren't doing it. The only nation that does that is the United States. That's why all deals are done in oil, or all oil deals are done in dollars. And it doesn't mean that all of them have to be done in dollars. Some of them can be done in other nations' currencies, but there's not enough of those other nations' currencies in order to facilitate all the trades that want to be done. Only the dollar can do that. So far. All right. You can't put salt and pepper on gold or cash. All right. Get your model 700. Yeah, right. I got a nice 16-foot 2.5 at Home Depot in the 75% of off pile today. Oh, nice. The deer is interested in economic policy. Yeah, it is. It's over there eating the green apples off that tree. All right. Gaddafi and Saddam were about Israel. Seems a bit too complicated for it to be about gold. Yeah, I kind of agree with that. Any thoughts on why Germany would be dumping their Bitcoin? I couldn't tell you why, I couldn't tell you why nations are doing the stuff that they do. Who knows? Like they might be trying to get into cash. It might have just been timed at this rate. I mean, I know that if I was a nation with a bunch of Bitcoin, I certainly wouldn't be selling on the downward slope. I would have been selling it on the upward, but whatever. I'm not government doing stupid things. I sometimes buy the whole coal cart. I got a couple of pole buildings. I can store stuff. Yeah. I've had other people do that. They'll come in and buy farm packs off of me, or what we will call the farm pack, and it's just a stack of lumber that looks like hell, and just make a single deal and get it all out. And, I knew a guy who bought a bunch off of me and built like pig pens and stuff like that out of it. Simon, you mentioned capitalism is the ideal economic system. I think competition in the market is great, but sometimes skeptical of socialism. Is the Cantillon effect a symptom of capitalism? Well, I would assume yeah. Yeah, I would assume yes. Because really, if you think about like what Cantillon is describing is the free market flowing of goods and services, and the effects of what happens. Like you think about it, like no matter what, like if it doesn't matter if you're a nation, if you're an individual, if you're a corporation, a business, whatever, it all kind of goes down through the same story. I mean, just think about it from your own personal standpoint, right? You're 18 years old, you get a job, the job sucks, you do shitty work, right? Nobody wants to pay you for it. You spend time at this job, you start picking up skills, you start doing things, you start getting paid a little bit more, right? You're becoming an industrious person, right? Before you weren't anything, you barely feed yourself, right? Then you become an industrious person that you can actually provide with your skills and your talents and everything else. You can actually provide a usefulness to other people that they can profit from what it is that you're doing, right? You're rising, right? So again, like just like any nation or just like anything else, you're that industrious person, you're starting to acquire more money, your skills and labor, everything that you're providing as far as your labor goes is worth more money. Well, then you start increasing that, right? So just like anything else, you get a better paying job, you start doing what? You start buying nicer houses and cars, right? You take on the debts. Well, everything is cool so long as you get the raises every year, and so long as like, the bonuses come in and stuff like that. And you can build this life up. But then the moment that a recession hits and you lose your job, right? And you have to go take another job where you're not making as much money, and now all of a sudden there's a lot less money coming in. Well, how does that feel? Well, that's incredibly painful, right? Now you're starting to lose on a lot of stuff. You're losing out your car. You might be losing your house. You might be losing, having your wages garnished, like just straight up taken away from you because you haven't been making your bill payments or something of that nature. And all of a sudden you start finding yourself in a lot of pain and misery. It's the same thing, right? As money increases, as you have a flow of money coming in, things can expand and grow and everybody's singing happy songs and stuff. But the moment it reverses and goes the other way, the painful experience from it is just too much to bear. So now here you think about it, like if you go back in history and look through about any time, like I don't care where you were, like just like any time, right? If you have a rising nation, right? The Roman Empire going around taking, like Romans just stomping and taking over all kinds of places, right? Running into Egypt or just doing all this stuff, okay? Well, you think about it, the reason why they were doing that, and Cantillon explains it in his essay, is because they needed to find a way to get new money, and the only way to do it was to just literally go on a war effort and just start taking it from everybody, because they didn't produce enough for themselves. See, they had mass amounts of foreign production coming in, and in order to maintain the standard of living, they had to have ever increasing amounts of money pouring in, and the only way to do that was to be on a constant conquering conquest. Right? I mean, that was the only way to do it. And then once eventually it came to an end where they just couldn't do it anymore, it was over. And the whole empire started to collapse, just like any other one out there. It always goes to the same thing, whether you're an individual going through bankruptcy because you lost your job or got cut in wages. It's the same thing. It's just, way bigger, to Rome than it is to you, but it's essentially the same economic force that's happening. Yeah. There's no difference in the economic force. It's just much grander on that scale than it is on yours. But think about it, as an individual, it's just as painful in an experience. So, I mean, is capitalism ideal? No, absolutely not. Is it ideal? But to me, it's the most ideal one that I would want to participate in. It gives me the best shot, you know. I don't know if what I typed made sense. That's okay. I don't know if what I say makes sense. It's like we're okay, man. It's fine. A stable coin that is priced in real time against a basket of fluctuating real assets. I mean, yeah, I could see something like that happening. I mean, is that what ends up taking place? It could. I mean, but trying to set that up to be that way, I don't know. This will be possible through an ever increasing and inevitable interconnected Internet of Things. Yeah. With the dollar being unstable, is it still good for contracts? You could contract to build a highway for $1 billion, and when you're done, $1 billion might buy you a candy bar. No, you're absolutely right, Joe. No, that is not too far off from a very logical statement. I mean, that's a little unrealistic, as far as getting a candy bar, but no, but I think the principle behind the statement is actually very true, is that why would anybody want a contract in the dollar that by the time you get paid in the dollars, it doesn't buy as much as what you had considered the contract, or when you had considered the contract, right? Like basically you lost the purchasing power of those dollars by the time the contract was fulfilled. Totally reasonable argument on why you wouldn't want to do it in dollars. Here's the thing. What else are you going to do it in? There's nothing else. That's the point. That's why everybody does it in dollars, because there's literally nothing else. If you didn't do it in dollars, you just wouldn't do it, because there's nothing else available. That's the point, right? And see, if everybody all of a sudden says, well, no, we can just use yen, or we'll use yuan, or we'll use whatever. Believe me, if any one of those, one particular, or any, actually all of them, if the dollar was ceased to use and all those all of a sudden started to get used, do you realize the strength of those currencies would absolutely destroy their exports? They would have absolutely no they would have no industry at all, because nobody would be able to afford any of their stuff. Their currencies would grow too strong, right? It would be the only thing that's available. It's hard to wrap your head around that. See, like we think like the dollar and its overabundance and its all this currency that's out there is some sort of like magical thing that can just take place by any currency. It doesn't work like that. It's not something that can just be done, right? Although a lot of people think that, and although you can just fire up the printing presses and just make money happen, you can't just all of a sudden make it a world reserve currency. You can't make something else a world reserve currency. You have to have a safe and liquid asset like the U.S. Treasuries. That means you have to have a country that's in debt as much as the United States. It's not possible. You can't just all of a sudden be in that much debt. Even if you wanted to be, you'd have to convince the world to take it on. And the world is going to be like, hell no, I ain't taking on that much. Like you going, how much in that? How fast? Hell no. It's like literally watching somebody spend $100,000 on credit cards every single day, right? And then expect somebody else to give them more credit cards. Like you wouldn't do it. They're no, hell no. But if you're already $1 billion in debt and you ask somebody for a $10,000 credit card, do you think it's really going to be like, here you go, man, whatever? It's just like at that point, it doesn't matter, because it's just like so much of it is now accumulated out there. You don't have to create that much debt. It's already there. But if another nation wanted to take that over, they would have to try and create that much debt. That means they would have to go into debt as much as that in order to create a safe and liquid asset that the people could use to then do trade and have a collateral and all the other stuff. Like people don't realize how valuable a U.S. Treasury is as a world reserve currency. Not just dollars, but the Treasury itself, the U.S. Treasuries. So there's no getting close to that. Like, I don't care how many stories I hear about these nations that are now linking up and being part of the BRICS nations and stuff like that. I laugh every time I see that. Like, it's going to make any difference. I mean, it might make some difference. It might make a little bit of like, transactional difference as far as like what currencies are being used, but they're not even coming remotely close to touching what the dollar is doing and what it can do and what it's going to do going into the future. In fact, if you really think about it, the Federal Reserve is in a position in which that they're trying to provide a way, figuring out a way to get the liquidity out there to the world. They have a hard time doing that. You would think that the only way to really relieve this pressure is to have somebody else's liquidity start doing transactions. Yeah. The Federal Reserve is in a point in which that the demand for their liabilities for the dollars out there outside of the world is huge. right? When those contracts come due, there's not enough dollars to pay all those contracts off. Right? Now, how is it that the Federal Reserve is going to provide the world with those dollars, right? So that those contracts don't completely collapse, because if they collapse, they're taking out the entire world economy, right? So all these contracts have to be fulfilled, or at least have the ability or the reasonable expectations that they will be fulfilled. And now, how is it that the Federal Reserve is going to get these dollars out there to the world? They're already saying we can't buy the U.S. Treasuries anymore. We could, we're not. That's an unsustainable debt path. We will destroy the United States if we go down this road. But yet the world is demanding the dollars, the liquidity out there. So what is the Federal Reserve is going to do? Right? This is why we keep doing these videos, is because I believe that they're going to start stepping into foreign debt. They're going to start buying the production, or I'm sorry, buy the sovereign debt of foreign nations. And I like, this isn't my imagination. This is coming from Ben Bernanke's speech talking about deflation and how to prevent it from occurring here. And he uses this reason far after all the rest of the stuff has failed, like quantitative easing and all the other stuff. He says that the Federal Reserve could find another way to get liquidity out there to the world by buying up foreign debt. And this is like scary to think about. And nobody really talks about that. All right, $5 from Will. Do you see more nations selling their treasury bonds to back their currencies like Japan? Is this the predicted start to the liquidity crisis? I believe it really is. And I think, like, if there's a liquidity issue that starts within the bond market, then it'll just start spreading throughout the rest of the financial market. So anything that's happening within the treasury market is absolutely impactful and critical to the rest of the banking industry. And when you see nations dumping out treasuries, you got Japan, you got China, you got all these nations that are unloading treasuries, it's very concerning for the idea that, oh shit, if there's not these buyers out there, that's the liquidity, that's the market starting to freeze up, what's going to happen, right? Well, this was expected. Like, this was definitely an expected moment. Now, I don't know exactly where it is inside of their data that they know this, but they definitely know that China has a crap ton of dollar-denominated debt, along with China, along with Japan, along with all these other nations that are out there. And in order for them to facilitate the payment of those contracts that are due in dollars, they have to get dollars. Now, you can do that by selling your goods and services. You can borrow more of it, or you can sell off your asset that is due, that has cash value. Treasury bonds. You sell the treasury bonds, you get the cash, you can pay your debts with it. And now that's what I feel a lot of people are doing right now. And I do feel that the Federal Reserve and the Treasury were well aware that this moment was going to be coming, that there was going to be a slowdown in global activity, that these dollar-denominated contracts were going to come due, right? And that when they started to come due, that they would have liquidity issues taking place within the treasury market. That's why they made the statement literally a year ago, talking about how they were going to step in and buy back their own bonds, talking about the treasury. And the Federal Reserve had backed off on the tightening of monetary policy, or I'm sorry, had backed off on the unwinding of the balance sheet, meaning that instead of allowing more treasuries to go into the market, they were going to keep more of those balance on their balance sheet. Right? So again, this is two moments at the exact same time that we have these treasuries selling off. It all seems to be very coincidental that it happened to be timed so perfectly. Right? See, I think they knew this was coming and they were preparing for it. In fact, I don't like, now that it's taken place, it seems more obvious now that they had planned it than ever. You know, because, like, I mean, how many videos, how many times did I talk about it? I mean, even at Zuber's conference, I said, keep an eye out for the treasury bond buyback. That's going to be a liquidity issue happening within the market. This is it, right? Those treasuries being dumped out there on the global market, that's treasury liquidity issues happening. The Treasury itself and the Federal Reserve are taking efforts to try and prevent the negative effects of that. And it's working. Like, it's not working great, but it's working to the point that it's, like, so far hasn't created a crisis situation, right? Which typically you would probably start to see in this kind of, you know, environment or arena. All right. Man, I'm starting to lose my voice here, guys. All right, 2 hours into this. I think it's been a pretty good live stream. Let me see. You guys, I mean, I thank you all so much. Thank you so much, Grand Roofing, for all the super chats and all the memberships and everything else, man. Very cool of you. I can't thank you enough. And everybody else being here and all the thumbs up and everything else you guys have done. Ever notice how nobody takes out loans in Bitcoin? Not stable or inflationary enough to function as a currency. Well, yeah. I mean, I wouldn't take out a loan in Bitcoin. I mean, I would take out a dollar-denominated loan in Bitcoin, saying like, I borrow $100 in Bitcoin today, and I promise to pay you $100 in Bitcoin in the future. So whatever the Bitcoin price is in the future, I'll give you $100 worth, right? So no matter what, you'll be full on $100, and we'll do the deal in Bitcoin. But we're not going to facilitate the trade in a set amount of Bitcoin. We're going to facilitate the trade in a set amount of dollars, right? And then whatever the dollar value to Bitcoin is at the time, we'll trade that much Bitcoin. So I borrow $100 in Bitcoin from you today, whatever that is today. And then in the future, whatever $100 worth of Bitcoin is, I give you that much Bitcoin. And it's probably going to be just a tiny little bit, right? I would do that deal, right? But that's the only way I would do a deal in Bitcoin, a loan deal. Because it's a deflationary currency. You're screwing yourself by borrowing in Bitcoin and promising to pay back in the same amount of Bitcoin. Like you borrow 1 Bitcoin and then in the future you're going to pay back 1 Bitcoin. That is you time it well. Time it well, because it's a volatile currency. You'll probably be able to do it, but time that well, because it's a deflationary currency. It's only going to go up in value from here. And because of that, you're very, very, very small chance that you will be able to actually be able to pay that Bitcoin back for a profit to you. It will be more of a profit to them. All right. BTC can save the world if it is allowed to. I like Bitcoin, but I don't think it can save the world. In fact, it would be harder on the world. All right, going broke with option trading is extremely easy. It's called going short. Stock, gold, silver, too. Yeah, absolutely. Alrighty, guys, this has been a really fun, long live stream. I really appreciate everybody being here. We got $97.99 in super chats. That is absolutely amazing. Thank you so much, Grand Roofing. Be sure and check out Grand Roofing's video that he had posted talking about Gresham's Law. I'm going to try and find it. Hopefully, send me the email for the link, and then I'll go put it in the community page. But let's show him some love and some support for being so generous with the Uneducated Economist YouTube channel here, and with all the donations and all the subscriptions that have happened here over tonight. It's very cool. I never would have expected something like that to take place. So thank you very much, Grand Roofing, for all the support and everything you've done. Leave comments after the stream. Yeah, please do. So everybody who's on the stream right now, once I end the stream, come right back onto it, and please leave a comment. And if you haven't hit the like button, go hit the like button. The algorithm's going to love it. They'll pick up the video, spread it around for more people to join in. And again, thank you so much for being here, Uneducated Economist. You guys let me know. The video again is, what is Gresham's Law? Arduino Project Copper Penny Sorter. Arduino? Am I saying that right? All right. So, awesome. You guys are awesome. Everybody's awesome. Have an awesome day. Uneducated Economist, you let me know. You guys want one more shot of the deer? Let me see. Oh, she's just walking around. Oh, you can only see her butt now. Hey. All right. Uneducated Economist, you guys let me